Hello, I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. Welcome to the ESS BIZTOOLS Accountants Minute podcast. I hope you're having a wonderful day. In this week's edition, we have titled it, very importantly, Capital Raising Advisory, a powerful diversification for your firm. I hope it is. Or I hope you're thinking very seriously about how you're going to meet the challenges, not only for your SME clients, and thousands of them really do need assistance, but also for your accounting or bookkeeping firm or business advisory firm, because every day things are changing. Now, we all know that, but we need to start looking around. We're a lucky profession, accountants. Very lucky, I think. In 2001, we had GST, or maybe it was 2000, I can't remember now, come into play. That created a great opportunity for accountants. But now we've got other changes occurring. The tax office are improving their communications technology so that they believe more and more taxpayers will directly communicate with the tax office. Now, I know businesses will still want their tax returns prepared, and that's important. But what's emerged now as a new great opportunity for accountancy firms is that with today's software and technology and communications facilities, you're able to offer a virtual chief financial officer service, or as some of you like, a virtual bookkeeping service or virtual accounting service. The real thing is you can help your clients to run their businesses as if you were the full-time employed accountant or chief financial officer working for them. Now, this really wasn't an opportunity until very recently. We have talked about it for a long time. In fact, the Financial Management Research Centre at the University of New England was established back in 1982 with the purpose of assisting accountants to offer a broader range of services in addition to taxation. But we can't really worry about why it's taken so long, but it's now an opportunity. And I think it's an opportunity you should be grasping. Over the last 7 weeks, we have featured a number of diversification opportunities for accountants. And at ESS BIZTOOLS, we have committed the time, the money, and the resources to developing product packages to guide you through the process, videos to give you a detailed explanation, forms for you to complete. In fact, in the research and development package that we discussed last week, there are 46 forms just to give you the resources to complete every conceivable document that Oz Industry or the tax office may require. And this week, we're looking at capital raising. It does give you the opportunity to diversify. Let's just have a think about it. Interest rates are still high on the current standards. I was around when they got over 20%. I never want to see that occur again. But they're still high, relative speaking, at present. Your clients can utilise the business way of running businesses by raising capital from the public. We were a bit slow in getting the legislation underway in Australia. I think we're about 6 years behind New Zealand, England, UK, Canada, Singapore, Japan. But we finally got started on crowdsourced funding equity raising in about 2017. The government obviously thought it was going to go very well because they appointed 16 businesses that had an Australian financial services licence as intermediaries, because the legislation requires an intermediary to perform a great role. They wear two hats, actually. One, they acting as the agent for ASIC, Australian Security Investment Commission. But secondly, they are brokers on behalf of themselves in raising the capital. They have their own targets. One of them's got over 50,000 prospects, they tell me. And they make contact with them. Unfortunately, those 16 firms are not getting anywhere near enough work. In fact, on my reckoning, 2, maybe 2.5 are very busy. Why? Because they're not getting enough deal flow. Why? I don't think accountants are looking at this opportunity for clients in enough detail and sitting down and talking to your clients, explaining to them the whole concept of private companies started 400, 500 years ago when ships started sailing around the world from Spain, from Portugal, and ultimately from England. And they were basically limited liability companies, which group of people put their money into. Well, we've come a long way since then, and we've got companies on the stock exchange, but we've got thousands of private companies in Australia. And for a long time, the only way they could raise any capital was under Section 708 of the Corporations Act from 2001. And prior to that, there were similar provisions in the various state legislation, and I can remember them. But there was no real way that anyone could raise capital other than in a basis of raising from the market, other than from very close friends and family members. That was Section 708, and that's really how 708 still exists. But under Malcolm Turnbull as Prime Minister, he introduced crowdsourced funding, equity raising, and early stage innovation company. Because Malcolm Turnbull had a great understanding of capital raising by small businesses. Newspaper reports indicated he made a significant amount of money on his investments in some of those companies, and that's great for him. But we need to talk about it, because you just don't roll up and raise capital. Your client needs to understand the process, and it's a different process for crowdsourced funding, equity raising, as it is for early stage innovation company. There's a different set of rules. It's under different sections. Crowdsourced funding, equity raising is under the Corporations Act. Early stage innovation company is governed by the Tax Act. So they're completely different. In ESS BizTools, we have painstakingly summarised every potential step, or hopefully every question that you could get asked by your clients, so that you can take them through we'll concentrate on crowdsourced funding at this day, the crowdsourced funding process. Now, the headline acts, I suppose, are a private company or an unlisted public company with turnover less than $25 million on an international basis, gross value of assets internationally less than $25 million, not listed on a stock exchange. They're the basic rules. But an application has to be made through one of these firms that have been appointed a crowdsourced funding intermediary. So they have got a lot of power and a lot of responsibility. I think every applicant needs to understand that power and responsibility that they have. So the first step when I help someone on crowdsourced funding, equity raising, is we sit down and have a review meeting. Normally lasts about 4 hours, to take the leadership team and the directors through the process, so there's a clear understanding of what's involved. Now, sometimes, not very often, clients say, oh, no, that's not for me. I don't like the idea of other shareholders. Well, that's their decision, of course, and I can understand that, but it's a way of raising capital. And the whole idea, of course, is you're raising capital to grow the asset, to grow the business. So hopefully the original shareholders, if they also the leadership team, are capable of running the business to make it grow so that they get an adequate reward out of it, and so do the new investors. But it just doesn't end there. Just understanding it is not enough. They then need a realistic business plan, looking at where they currently are at and how they are going to grow this business. Because accepting capital from the public imposes an obligation to try and grow the business. That's why you're raising capital. That then requires predictive accounting reports, budgets, cash flow forecasts, a real analysis of the key drivers. What's the inventory levels going to be, the capital expenditure, the research and development activities. Preparing a projected cash flow forecast is very important. And then the projected balance sheet, which will show what the business is going to look like. And that process should all be completed, I think, before any contact's made with a intermediary, other than to get a general overview of it. What I suggest is you take your clients and show them the intermediaries' websites. And 2 of them have got outstanding websites. So they can see how the companies are being promoted and listed. Another very important aspect, I think, which is not in the legislation, but it's occurred over time, is to try to encourage anyone that's interested in raising crowdsourced funding, equity raising, to make sure that they have a workable website operating and they keep it up to date and they give an indication of what their company's all about. Now, they can't solicit from the public at this stage, but they can make sure they are communicating to their customers, to their suppliers, to their employees, to other people in their location, so that there's a general awareness of who this company is, so that when the intermediary is given the okay, that there is some knowledge of who this company is in the local community where they are based. Your next role then is to introduce the company's directors to the intermediaries. Now, I have in the past suggested to people they might look at 3 or 4 of the intermediaries. I would normally give them a list of the 16. Unfortunately, there's not really 16 operating at present. I find that one of the great disappointments. But interview 2 or 3 of them, because the intermediary is a very important person. They're not some figurehead on the sideline. They're acting as the representative of ASIC, but then they're going to help raise the money because they get paid their fee on the capital that's raised. And if they don't raise it at the level that's been agreed, they have to refund all that money and then they don't get a fee. So it's a very important commercial arrangement you could introduce them to. Then we should bear in mind some of the bad news that we receive at around this stage. 2 of the leading intermediaries publish an annual report. They don't have to, but they do. And one of the concerning statistics that's contained in one of the intermediaries' reports is that they only accept about 3% of the people who apply to them or come and talk to them about raising capital as a crowdsourced funding company. Their reasoning is the people weren't prepared, they didn't understand, they didn't have the business plan, the budgets, the cash flows, and a document that I did omit, which you then have to prepare once you've made the arrangements with them, and that's the crowdsourced funding offer document, which you would definitely be involved in the preparation of. So, unfortunately, people were talking to the intermediaries but had not been prepared. I hope none of those people have been to their accountants. But I don't know. And the intermediaries haven't really answered my question when I've asked them that. They just say to me, if you can encourage more accountants to get involved, it would be great for this industry. Incidentally, $440 million has been raised from crowdsourced funding equity raising in Australia. And I don't think we're going anywhere near at the level for full potential. So please think about it. How can you get involved? Because this will introduce a range of very interesting services for your firm. It could lead to virtual chief financial officer appointments. It could lead to being a member of the board of advice or even the board of directors if you want to take that appointment. It opens up great opportunities for your team accountants to get some real commercial experience, because that covers everything, doesn't it? They need to have an operating business. They need to be able to talk about it through their social media and on their website. They need a realistic business plan, budgets, cash flow forecasts, projected balance sheets. They need to understand how crowdsourced funding operates. They need the crowdsourced funding offer document to be prepared. And then they hopefully are going to say, well, we need assistance going forward now. We've raised $1 million. We're putting it to effect. We don't need a full-time CFO. In fact, we can't afford one, they probably are saying. But we'd look at a proposal from your firm. And that could be anywhere between $40,000 and $120,000 annual fee. We've got clients working with I should have said we've got accountants working with clients in those sort of parameters for offering a chief financial officer service. Please think about it. It's a great diversification. The stablemate of crowdsourced funding equity raising when Malcolm Turnbull's government introduced this legislation was Early Stage Innovation Company. Now, this was specifically targeted at young companies aged under 3 years, not young executives or young directors, but a young company incorporated in the last 3 years. There is some rules that some can get admitted up to 6 years, but primarily it's 3 years. The turnover of those companies has to be less than $200,000, not including any grant money received from the Accelerating Commercialisation Grant, which no longer exists, but there's probably some companies out there still receiving some of the benefits that grant offered. The expenditure of that company has to be under $1 million, and both of those expenditure and income are in the last 12 months. The company then has to go through one of two tests. The gateway test is a series of questions. There's about 10 questions, and there are points allocated for the answers of those questions. The basis is that an applicant has to be able to earn 100 points from answering those questions. If they can do that and they have the documentation, and we've set up our system in ESS BIZTOOLS for each of those 10 questions, a form to be completed for that question so that the requirements of the legislation are answered, and you've got that in your files. But if you help your client and you've achieved 100 points, you have self-assessed. You don't have to submit anything to the tax office at this stage. In fact, you can then say to your client, you can now go and talk to some potential investors because you have self-assessed as a early stage innovation company. In our system, you've got a full set of documentation which covers the under 3 year test, the under $1 million expenditure test, the under $200,000 income test. It's all documented, can be signed by the directors. So there's a document file that can be submitted to the potential investors, because I think they'll be wary, or they are wary, the ones I've come across under the gateway test, because they know it's all been done on a self-assessment basis. And they're going to contribute capital into this company in the expectation that the company is going to be accepted as an early stage innovation company with no dramas. The other test is called the principles test. There are 5 questions. Now, This is a set of questions that's really targeted at a business that either has just started on that age, so it's a very young company, or never did much for the first couple of years and is now doing things. It might not have conducted any real research activities at this stage, but they've planned it. They've got a vision. Because of this, they are required to answer 5 questions, which look at their preparation, their ambitions, what they believe they can achieve and how they're going to do it, and what their markets are, or what they believe they are going to be. And they have to submit an application to the tax office for approval that they meet the status of an early stage innovation company. And the tax office issue a certificate. The real benefit out of all this is that the government set this legislation up to encourage investors to have a serious look at young Australian companies who were involved in research and development or innovative activities. Companies that we really should be supporting. And what they did is they introduced a carrot for investors, an incentive for them. I don't know of any other part of Australian corporate legislation where the government has stepped in and paid a bonus, an incentive to people who invest in a private company. And they have. Because those investors who invest as part of this status determination, whether the company is an early stage innovation company, receive a tax credit of 20% of their investment. Now, it's a maximum of $10,000 for a retail investor, because the maximum amount that a retail investor can invest in one of these companies is $50,000. But for a sophisticated investor, there's no limit of what can be invested, but the maximum tax offset is $200,000. So obviously that's calculated on $1 million investment. That credit comes off the taxation debt that that investor owes, and if they can't spend it this year or next year, they carry it forward until they do actually utilise it with the tax office. But if they hold those shares issued as part of this status determination for more than 12 months, sorry, I'll rephrase that, for at least 12 months and up to 10 years, so between 12 months and 10 years, they avoid capital gains tax on those shares issued as part of the status determination. So let me say that again. If they hold the shares for longer than 12 months, but less than 10 years, there's no capital gains tax. If they still hold those shares at the end of 10 years, they're able to have the company revalued and they have a new cost price for their ultimate capital gains tax calculation. Now, this is work that very much features accountants or bookkeepers who are offering advanced services to be involved in every step of the way. We have developed a complete product package that gives you the forms and the documents that you need to assemble for the application to go to the ATO for approval that the company is a early stage innovation company, to get that certificate, or the documentation for the self-assessment process under the gateway test. And once again, as for crowdsourced funding equity raising, this opens up tremendous opportunities for undertaking virtual CFO services once the company has raised the capital. Because this application also requires business plans, the predictive accounting reports, budgets, cash flow forecasts, projected balance sheets, and an understanding of how the system works. Sitting down, taking your clients through it. This is real diversification services that I hope a few hundred more accountants around Australia will react to. I don't think we need the whole 12,000 firms offering these services, but it'd be nice if everyone clearly understood it. And if they were not going to be active participants, that they would refer their clients onto someone else that's offering those services. Because it gives SMEs an opportunity to raise capital for their businesses without having to worry about security and interest and loan repayments, and get on with scaling up and running the business. At ESS BizTools, we have accepted this challenge. I think there's a lot of diversified services that can be offered. But I need your assistance. I need your input. And so do your SME clients. I want you to show me or tell me if you think there's areas we could have added to our packages, and you only find that out if you've used them. But no one has come back to me on that score for the last 10, 12 years. So we're fairly confident that we've answered the questions that are required in all of our packages to meet those requirements. We do have a special promotion on at present. It's the start of a new financial year. You don't need me to tell you that. So we're continuing the end of financial year promotion we had, which is going through to the 8th of July, next Tuesday, the 8th of July, whereby you can take advantage of our 50% discount on our packages, which would give you the resources to be able to deliver a fantastic range of services. So capital raising fits into the overall scheme of things that we've been presenting to you over the last 7 weeks. We started off with, let's talk business, not just tax. That's important. And that helps diversify your activities. Scaling up, getting the foundations right. The foundations are vital for every business, and making sure you clearly understand your client, understand the business. 1 inch wide but a mile deep is very, very important. Family businesses, understanding all the various strategies and requirements and disputes that can arise in family businesses is an important part of offering a range of diversified services. Financial analysis, key performance indicators and business metrics is also very important. In fact, we're running a complimentary webinar on that very subject next Wednesday. You can go to our website to register. Corporate governance. If you're going to be a mentor to your clients and advising them, and they're going to be having other people come onto their board of directors, they need to really understand corporate governance, the duties and responsibilities of directors, and the leadership team need to also understand that material. Business planning, it all starts with a business plan, but it's not a document you just go off into a room in your office and sit down and write. It's got to be a document that's worked through with the leadership team. I think you're the facilitator. That's how I've prepared hundreds of business plans. I hope in every occasion my clients were happy that I was the facilitator. I just didn't go and write the business plans on my own and take it back to them. Because you've got to get their buy-in. You've got to get their enthusiasm. I like getting their signatures on the document. The leadership team saying, we are going to deliver this range of services. And then last week we had research and development, a vital component, the lead-in really for looking at the early stage innovation company concept that we've talked about in this edition of the Accountants Minute podcast. And today we've looked at capital raising, in particular crowdsource funding and early stage innovation companies. If you've got any questions, please send me an email, peter@essbiztools.com.au. I invite you to go to our website and have a good look at the material which we are producing. It's always a work in progress, our website, because we are changing, reviewing, updating information all of the time. But please go there and have a look, www.essbiztools.com.au. And don't forget, our 50% discount runs through to close of business on Tuesday, the 8th of July. I hope to hear from you. Stay safe. Have a great day. Goodbye.